Good evening, friends. Can you all hear me? Good evening. Iranga, can you hear me?
Yes, I am.
Okay. Good evening, all. First of all, please mute your uh, device. Right. Right. Today we are going to start our first lecture on business accountancy. And before starting the session, I like to make a small request that since this is a class and we are targeting on an exam, uh, we should prepare for it from the beginning. That's therefore I'm asking you to don't use sofa or your bed to listen to this lecture. Participate, just go to your study table and switch on your study mode, right? Okay. Then this session, I want to tell you that this lecture series is special designed for bankers, targeting on IBSL, IBF exam, and mainly targeting students, those who are not having any accounting touch. It doesn't matter you have studied it previously, but I'm targeting on the people who haven't any accounting idea about this subject, right? Also, from the beginning, I want to say that if you participate to full series, to all subjects, sorry, to all lectures, and if you follow the given guidelines, and if you do all the given homework, practice exercises, you will be able to go through this exam. I can make you make a guarantee because uh, accounting is an easy subject. Don't think that it is very tough or it is very terrible, can't understand. This is a technical subject, so if we can uh, have good idea about the basics and their concepts, practices, and given standards, we will be able to easily understand the uh, financial reports and other accounting lessons, right? Uh, Before starting, I want to say that I'm also a banker. Some people know me, actually an ex-banker, and I resigned from the bank a few months ago. And having 15 years experience in banking. I did my first degree in banking and finance, BSc special degree, and I'm a certified business accountant, having postgraduate and the Iabf also. Uh, right? Then, well, we will start the lesson. Uh, First, forget that you all are bankers, right? You are a student now, and imagine that you are not doing a banking job. You are doing your own business. You are doing your own business. Say, for example, BA Holdings Private Limited. Say you are the owner of BA Holdings Private Limited. So it's a manufacturing firm, right? I'm I ask you, there are there are some individuals and some groups, parties, or other people having interest in your BA Holdings Private Limited. Who are the interested people who may be as a owner you are the first interesting people. Then the managers, they are also very interesting business. And then employees, then government, sometimes suppliers and vendors, and also the bankers, and sometimes auditors, or some maybe researchers or students. These people are looking your business, how it is operating, what are the figures, is it profitable, how much profit it has made for years, and what how it is operating, or how it is we could say that how it is playing to achieve their targets. They are looking. Why they are looking? Because these all people, they are very interesting. The what we say that results that we are, and that is BA Holdings Private Limited. It is a manufacturing firm, and these people are looking how it is operating. So, what is the purpose of looking at owners? Why, as a owner, why you are interested in business, and why you are looking their figures, and why you are thinking about the business? That is because as a owner, you want to verify or confirm that your return on investment that you have invested, and you are looking for adequate return on investment, right? Or sometimes you are looking at business and thinking that, do I want to do some additional investment? If my investment is secured, is it making profit, or is it earning good ROI? So you want to have good knowledge, good confirmation about these questions. Then the managers are the people who are managing the or controlling the people business, and they are the people planning, right? Then managers are interested in business operations. Why? They want to check whether their plans are in action. They have plan, and they want to check whether the plans are in action, right? Or they want to check whether or decide future plans or strategies. If there is any lapses, they have to decide or create some strategies, or and to compare the results with what they expected. So because of these reasons, managers are interested in business operations. Then employees. Why employees are interested? Why employees are interested about BA Holdings Private Limited and their operations? Because they want to verify or be guaranteed that their job is secure. Also, they want to check whether the company has adequate capacity to increase their salaries or bonuses. That's why employees are interested in business. In the government, they mainly focus on tax payments and other periodic returns. And suppliers. Why suppliers or vendors are keen in business, interested in business? Because they want to rely that their job is, their business is safe. Suppliers, they want to get verified that can we supply for BA Holdings for years. Right? Or do we want to find some other to supply? Right. Okay. Then bankers. Bankers, why? Bankers are also interested in BA Holdings. Why BA Holdings? Bankers want to check whether there is any opportunity for lending. Also, whether if we have if banker has already late, then they want to get verified that recoveries and dues are recovered, right? So because of these reasons, these people, owners, managers, employees, government, suppliers, bankers, auditors, researchers, and students, they all are interested in looking at BA holdings. Right? BA, why they are looking at BA holdings? They have to take different decisions based on the figures, based on the uh, jobs that they are doing with BA holdings. So accounting, I'm not accounting provides this information. That's why business accounting is needed. That's why business accounting is developed. Main purpose is to provide information for interested parties. This is the main purpose of business accounting. Right? Then accounting. Accounting as a definition, here I have given accounting is a set of concepts and techniques that are used to identify, measure, record, classify, summarize, and report financial information of an economic unit to the users of the accounting information. Who are the users of the users? Interested parties, which we have discussed. In here, in these definitions, try to see that accounting is a set of concepts and techniques that are used to identify. This is the process of accounting, right? Identify, then we measure it, and we record it, and we classify it, then summarizes it and report. Report means we communicate the information to the relevant parties. And also see financial information. We look for only financial information. There may be various type of information, right? But we take for account only financial information. And this economic unit, what economic unit? This economic unit can be a business or government uh, or any organization uh, that we target to prepare financial account, right? Okay. Accounting unit. In case of BA accounting, BA holdings, accounting unit is BA holdings. Say maybe Sri Lankan government, it's also a accounting entity, and we make what balance of payments and budget other things. And it may be a nation, right? Different economic activities take place in an accounting entity. Right? What are the economic activities? There are two types: transactions and events. Transactions and events. Right? What is transaction? The transaction is defined as any incident that can change the element of a business that arise as a result of management decision. As a result of management decision. Right? If there is any change to account elements, basic account elements, that is called transaction. Right? Accounting elements. We are discussing it later. Uh, I just mentioned assets, then liabilities, equity, also then income, expenditure. These are called accounting elements. Then events. Any entity that does not arise as a result of management decision does not arise as a result of management decision, but can change the accounting fundamentals. Accounting fundamentals mean accounting elements based on other factors is called event. So these are the transactions and events. These both are taken into accounts. This is what we discussed. The main purpose of accounting is to provide information to the various interested parties. This interested parties also called stakeholders. Right? Then there may be some other objectives also. Be as a owner of the BA holdings, you want to know the operating result. Operating result means whether BA holdings is profitable or it is making loss. Right? Then you want to make sure that financial position of BA holdings also stable, whether our assets are reducing or whether it is increasing. Is there any working capital requirement? Right. What has happened to our net worth? These are financial questions. So uh, these three things, one, two, three. These are sub objectives, second objectives of accounting. First one is providing information to various interested parties or stakeholders, and second, to maintain a systematic record of business transactions. Second, third, to ascertain profit and loss. Fourth, to determine the financial positions. So stakeholders. In business, a stakeholders is any individual or group or party. Stakeholder means interested parties, right? Individuals, groups, or parties that has an interest in an organization and the outcome of its action. Common examples, what we discussed earlier, employees, customers, shareholders, suppliers, community, government, right? I'm just going through this because I explained it earlier. Uh, Customers, why they are strict? They are right. Main purpose of accounting is to provide information to their stakeholders or interested parties. So, information. What is information? Process data about an event that can be used effectively to make decisions is called information. So, main purpose of accounting is for information to their stakeholders, and information is process data about an event. Right? This information can be classified. How? information. This is divided into two what? Quantitative information and qualitative information. What is quantitative information? What is qualitative information? What is quantitative information? This quantitative information, again, we can divide into two: accounting information and non-accounting information. Right? Then accounting information is divided into two again: financial accounting and management accounting. Right? Information is process data. It can be divided into two: quantitative information, qualitative information. We take only quantitative information for accounting. We ignore qualitative information. And quantitative information, again, we can divide into two: accounting information and non-accounting information. Here also we take only accounting information for accounting, and accounting information, again, we divide into two: financial accounting and management accounting. Right? Uh, this financial accounting and management accounting is the main types of accounting. One, financial accounting; second, management accounting. Right, then quantitative information. Quantitative information is information that can be measured and presented financially or numerically. Information that can be measured financially or numerically is called quantitative information. Right? Only this measurable information is used in accounting. So, for example, what? For example, say example number one: our investment. Investment is rupees 100 million. We can say that our investment is rupees 100 million. So this information is presented financially, right? Second, say that total number of computers of terminals in our branch is 50. This has measured numerically, right? So quantitative information are information that can be measured financially or numerically. For example, BA Holdings Private Limited. In BA Holdings Private Limited, we have invested 100 million rupees. It is financially measured. The second example, total number of terminals in our branch is 50. It's numerically measured. So these are called quantitative information, right? Then qualitative information. Information that cannot be measured financially or numerically is called non-qualitative, quantitative or qualitative information. Right? Then what are the what are qualitative information or non-quantitative information? For example, say HNB, HNB, International Bank has well well-trained management team. Can we measure it numerically or financially? No, we can't. Then commercial bank has awarded as best bank 4 years, right? Can we measure it financially or numerically? No, we can't. So information is two types, quantitative and non-quantitative information. Quantitative information are information that can be measured in financially or numerically, and non-quantitative or qualitative information are information that cannot be measured financially or numerically. So for accounting purpose, we only take this quantitative information, right? Then this quantitative information again we can divide into two, accounting information and non-accounting information. So accounting information, define information presented in the accounting records is called accounting information, so that an organization can make a decision regarding any financial activity. Accounting information is presented in the form of accounting records. Say, for example, BA Holdings Private Limited has trading revenue or sale revenue of rupees 100 million. Also, we can say that BA Holdings Private Limited has an ending stock, year-end stock of 5 million, right? Also, we can say that BA Holdings Private Limited has year-end profit of 110 million, right? Likewise, these figures are provided, this information is provided in accounting records. So those information are called accounting information. Then non-accounting information, what are they? Information that is not financially measurable and cannot be presented in the accounts. Information that cannot be measured financially or cannot be presented in accounts is called non-accounting information. For example, staff commitment. Can we measure financially? Management skills. Can we measure? Or locational benefit? Can we measure? No, we can't. Right? Those are called non-accounting information. So information, providing information to stakeholders or interested parties is the main purpose of accounting. So this information is mainly divided into two, quantitative information and non-quantitative information. We take only quantitative information for accounts, and this again we divide into two: accounting information and non-accounting information. In accounting information, we take only accounting information for accounts. We ignore non-accounting information, right? Again, then we divide again this accounting information into two. What are they? Financial information and management accounting information. Financial accounting information. Information that can be presented using a financial unit is financial information. Financial unit means, say that HNB Kurnagar branch. It's a financial unit. Right? We say that net profit after tax is 10 million for month of January. Right? Those are financial accounting information. We provide our total number of assets is this much. Total number of deposit this much. Total number of advances this much. We can say it financial, right? Those are financial accounting information. Then what is, for example, what? For example, net profit for the month of Jan is 10 million. So then value of non-current assets is 2 million. We can say, right? Those are examples. Then what is management accounting information? Management accounting information is information used in the process of controlling the cost of a product or operation. The purpose of this information is to communicate controls and determine the cost of a particular product and to make decisions. Each and every month, head office will be you will be provided with some detailed profit and loss account or some other information, right? There we can manage. Your branch manager will say that our cost per employee is this much, and profit per employee is this much. Cost income ratio is this much, and our inflation ratio is this much. Likewise, our net interest margin is this much. Our operational cost is this much. Our commission is income is this much. Manager will say, why? Head office people, they send this branch manager these figures because manager have to control these things. Manager has to control cost. They have to control recoveries. They have to go to their targets on advances, deposits, and all. Manager have to control this. Manager have to budget this. Right? Manager have to make strategic decisions to achieve this given targets. Right? So that's why head office people they say they send this all information, right? Together with financial information. Right? Those are called management accounting information. Here I want to say that this financial accounting information will be provided both for internal and external parties. But in management accounting information will only be provided to internal parties for their decision making process. Right? We will compare this. So, based on this chart. What is that? Chart means we divided information into two: quantitative information, qualitative information, and again we divided this quantitative information into two: accounting information and non-accounting information. And again, this accounting information we divided into two: financial information and management information. So based on this financial information, uh, to generate this financial information, we use financial accounting process. And to generate this management information, we use management accounting process, right? So therefore, the main two types of accounting is financial accounting, number one; second, management accounting. In your syllabus here, 99% discuss on this financial accounting. So I'm keeping away this management account for a while, and here in after I will discuss only on this financial account. So financial account is what? Financial account is a process of preparing and presenting information related to past transactions. Related to what? Past transactions and events in an accounting unit to outside parties. Right? Past transactions and events in accounting unit to outside parties. Right? Then management accounting. Management accounting is the provision of financial and non-financial information. Here we say provide only financial information. Here financial and non-financial information also provided. For what? To enable managers to plan, control, and make decisions on their responsibilities. Right? Here we use past transaction, that means historical data. Here we use both historical data and forecasted data. Here main purpose is to enable management levels to perform their responsibilities. Right? Now we are comparing these two types of accounting: financial accounting and management accounting. Here, what I mentioned, use historical information in financial accounting. Then, in case of management accounting, use both historical and forecasted information. Right? In financial accounting, we provide information for both internal and external parties. In case of management, do we provide information to external parties? No, we provide information only for internal parties, because in management accounting information, there may be some information that we should not disclose to third parties or external parties. That's why management information is only provided to internal parties. Okay, then in financial accounting, financial statements are prepared for fixed period. There's a period, financial year or accounting period, right? But in case of management reports are prepared whenever needed. If the manager need it for quarterly, if we need it for a 6 month, for 1 year, 4 years, 2-3 years, whenever needed, right? But financial accounting, financial statements are prepared only for a given period. That is for accounting period or financial year, right? Then financial accounting. Rules of general accounting practices. That means there may be some concepts, what we call standard practices, right? Then accounting concepts. In financial accounting, we have to depend on these standards, practices, and concepts. But in management accounting, no, we do not have to depend on any standard or concept. Right? No fixed rules for preparation of reports. This comparison and these definitions on financial accounting and what we discuss on information and their classification, all these are very much important, and keep in mind that this will be tested in your papers, right? Then accounting process. Up to now, we discuss about why we should learn accounting, why we need accounting, and why business accounting is established or developed, and what is their main objectives and their sub-objectives. And then we discuss about information and their types of information. And again, we discuss about types of accounting, that is financial accounting and management accounting and their differences. And now we are going to discuss about accounting process. Right. Are you all sleeping now? Listen to me. Iranga, Iranga, are you there?
Yes, sir.
Right. Okay. Accounting process. As you all know that in each process, there is three parts: input, a process, and output. Accounting also there are some input part, a processing part, and output part. Right? What are these inputs? And what is the process? And what are the outputs? That we are discussing. Right? We learned about two accounting types: financial accounting and management accounting. In financial accounting, what are the inputs? And what is the process? Outputs. Inputs, process, output. In financial accounting, what can be the input data? This is not automated as in the bank, right? We have to do each and every entry posted. There are no automatic updates, right? Inputs, what? Can you imagine? We provide information on what? Transactions and events, right? We identify and measure what? Identified transactions and events. These are the inputs. Then what is the process? We identify financial transactions and events, and what we do? We record it, record classify, recording, classification, and again what we do, summarize this. Summarizing and interpret, interpretation, right? We first, as inputs, we identify financial or economic transactions and events, and then we put these things into the process. Process means recording, classification, and summarizing and interpretation, right? What will create? What will be the output? Output are financial reports. Financial reports. This is the process what we are going to do in financial accounting. What? Input, process, output. As inputs, we use, we identify, measure economic transactions and events, and we put these things into process. Process means recording, classify, summarize, and interpret. And after doing all these things, the output will be financial reports. Financial reports are the main what we accounting reports provided to holders to make their decisions. So what is financial? What includes profit and loss account, loss account, or income statement, then balance sheet, then changes in equity statement. We will discuss later. Then cash flow statement. These are included in financial reports. Right? In financial accounting, this is the process, and this is what we are going to discuss throughout this lesson. Right? Then management accounting. Management accounting. What will be the input? Input, process, output. What can be? What we use in management accounting? We use historical data and forecasted data. And what is the process? By using this historical and forecasted data, management will do planning. Plan. After making plans, they will prepare budget. And they will control the whole process towards achieving the planned target. This is the process. And what will be the output? As a result of planning, budgeting, and controlling, we will receive on the first month what? Approved budget. And ratios. Then overhead, cost figures. Then marginal cost figures. and some other ratios indicating investment decisions. And, for example, return on investment, return on assets, uh, return on capital employed. Those are output generated for management accounting process. Right? Okay. Then accounting process. Accounting process. What is the process step? We have done it now. Right? We identify economic transactions and events. Then after identify, what we do? We will measure it. Then what we do? We record it. Then classification, summarizing, interpretation. Here, summarizing. After summarizing, we have to do analyzing, and again we have to interpret the result. Interpretation. And after doing all these things, we have to communicate. What's the process of accounting? First, we identify economic transactions and events. Then what we do? We measure it. And again, what we do? We record those information and we classify those information. Then we summarize, and again we do analyzing and interpret this information and communicate the given information to interested parties or stakeholders. Okay. Any clarifications? Iranga? Onila, any clarification? Onila? Dhanujaya? Dhanujaya? Are you there? ළමයි ඉන්නව නේද ක්ලාස් එකේ? කවුරුත් කතා කරන්නේ නැහැ නේ. දනුජය ඉන්නවද ක්ලාස් එකේ?
ඉන්නයි.
class ඉන්නවද? කවුරුත් කතා කරන්නේ නැහැ. මම continue කරන්නම්. Then road map. Here road map. This is what we are going to do during this lecture sessions. What we are going to discuss, right? As we discussed, the main purpose of accountant is to provide information, right? Information. Information regarding what? This is regarding transactions and events. Right? These transactions are and events will provide us documents. What? Evidence. Source documents. Then using these source documents, we prepare this is the accounting process. Here we identify transactions and events, and then we have to do to record the information based on this source documents. Using these source documents, we record, we prepare primary books. Primary books. What are the primary books? Primary books. In recording primary books, we do classification part. Right? We classify all cash transaction in cash book. Right? All credit purchases we record in purchase journal. All credit sale we record in sales journal. All purchase return we record in purchase return journal. All sales return we record in sales return journal. And all petty cash we record in petty cash book. Other all records which are not relevant to above given journals are recorded in common journal. Okay. Then after identifying transaction and measuring, we record those information in primary books, and we classify all these things in these journals. And after classifying, what we have to do, we have to summarize things. In summarizing part, we take all the balances into one schedule that is called trial balance. Okay. Here we identify economic information and events, and based on the source documents, we enter these information into primary books. After taking these into primary books, we do our classification part, and after classifying this given information in these journals, we will do summarizing. In summarizing part, we prepare trial balance. That means we take all the balances in these accounts into one schedule. That is called trial balance. Then what we have to do in accounting process? We identified transaction and rules. We measured, and we record, and we summarize all these things. Then we have to do analyzing part. To do analyzing part, based on this trial balance, we prepare income statement, or we call it also P&L. Then statement of financial position, also we call balance sheet. Cash flow statement, changes in equity statement. We prepare these financial reports based on this trial balance. Okay, this is the accounting process. What we are going to discuss in detail in coming lectures. We identify information, economic information, and we uh, measure it, and we do recording in primary books, and we take this into journals, and after doing this, we do summarizing part. For that, we take balances in this account to this trial balance for one schedule. After preparing this trial balance, to do analyze, we prepare income statement, that is called profit and loss account. Then statement of financial position, what we call balance sheet. Then cash cash flow statement, and changes in equity statement. Then after analyzing, we have to interpret the given information. In interpretation, what we do, we compare the results generated in these statements. For example, take this profit and loss account or income statement. We see that what is the net profit margin generated last year, and what is in this year. Is that is it has increased or decreased? What are the reasons why it has happened? That is how we interpret. And in statement of financial position, we see that our short-term current liabilities has increased, and our working capital has increased or reduced, and our asset position, it has increased or decreased. So we compare. Compare means we are interpreting the given information, right? Then after doing all these things, we communicate this to communication. In communication, what we do? we prepare annual report. Annual report. Right. After preparing annual report, the accounting process is finished. So, අපි මෙතනින් එහාට කතා කරන්නේ මෙන්න මේ පාර්ට් එක. ඒ කියන්නේ අපි පටන් ගත්තා හිතන්නකෝ මෙතනින් පටන් ගන්නවා information economic information තියෙනවා. අපි ඒක identify කරගන්නවා. එතකොට අපි identify කරගන්න ක්‍රමය කතා කරා. ඊට පස්සේ ගන්න තොරතුරු ටික අපි primary books වල enter කරගන්න ඕනේ. ඒතර primary books මොනවද? cash book එකක් තියෙනවා. purchase journal එකක් තියෙනවා. sales journal එකක් තියෙනවා. එතකොට purchase return journal එකක් තියෙනවා. sales return journal එකක් තියෙනවා. petty cash book එකක් තියෙනවා. common journal එකක් තියෙනවා. එතකොට මේ එන entries ටික ඔක්කොම අපි මේ journals වල enter කරගන්න ඕනේ. enter කරගෙන ඉවරලා අපි summarize කරන part එකේදී ඒක හදනවා trial balance එකක් හදනවා. accounting period එක ඉවරනාම එතකොට මේ trial balance එක පාවිච්චි කරලා අපි financial accounts හදනවා. income statement එක, එතකොට statement of financial position, ඒ කියන්නේ balance sheet එක, cash flow statement එක, changes of equity statement එක. ඔය ටික හදලා ඉවරලා අපි ඔක කමියුනිකේට් කරනවා. මොන විදියකටද? annual report එකකින් හරි වෙන මොකක් හරි financial report එකක් විදියට අපි එළියට දෙනවා. මේ අපි කතා කරේ financial accounting process එක, management accounting process එක නෙවෙයි. financial accounting process එකේදී අපි මේ information external and internal parties දෙකලටම දෙන්න ඕනේ. එතකොට external parties වලට දෙන්න තමයි ගොඩාක් වෙලාවට අපි annual report එක හදන්නේ. අපි branches වලටත් මේ annual report එක එවෙනවා. එතකොට internal සහ external දෙකටම මේ දෙක පාවිච්චි වෙනවා. then අපි ඉස්සරහට කතා කරන්නේ මේ අපි දැන් කතා කරපු process එක primary books ටික, trial balance එක, එතකොට financial accounts. මේවා එකින් එක හදන්නේ කොහොමද කියලා කතා කරන්නේ. කතා කරන අපි දැන් මෙතන චූටි වෙලාවක අපිට ඉතුරු වෙන්නේ වෙලාව මදි වෙනවා. එතකොට ඒක නිසා අපි ඊළඟ ලෙක්චර් එකේදී ඒ ගැන කතා කරන්න දාගමු. අපි අද කරපු පාඩමට ගැන මොකක් හරි ක්ලැරිෆිකේෂන් එකක් කාට හරි තියෙනවා නම් ප්‍රශ්නයක් අහන්න පුළුවන්. Okay, then shall we close for today? Iranga?
Okay.
Chulani?
Okay.
Lahiru. Onila? Onila, are you there?
Okay, yes, I'm there.
Shall we close for today then?
Okay.
Okay, good night.